Okay, pay attention. Pay attention. Online students, can you hear me? Yes, sir. Yes, sir. Okay. Now, in this session, we are going to complete three things. Number one, agricultural income. Number two, set of carry forward. And number three, clubbing. Three things we are going to discuss. Okay. Number one, pay attention. Agricultural income. So, we all know that agricultural income is exempt. Is exempt under section 10(1). What is agricultural income? Because if it is not defined, we will try to call all our incomes as agricultural income. For example, I am teaching you earning income. Hello? Is it taxable for me? Yes. So what I will do, I will start teaching you from my farm. I am giving the coaching from my agricultural farm. So whatever income by teaching I am earning on my agricultural farm is my agricultural income, fully exempt. Possible or not? Then what Sara sir will do? He will start his KS cafe on the agricultural farm, and whatever income he will earn from KS cafe on the agricultural farm will be agricultural income. So this way everyone will start calling their incomes as, so it will be very difficult. So the government the law has defined that what is agricultural income which you can exempt. Yes or no? So the definition of agricultural income is given in section 21A. Section first, income. Any rent or revenue derived from a land which is situated in India and used for the purpose of agriculture. So this rent or revenue coming from land which is situated in and used for agricultural purpose, this rent or revenue will be treated as agricultural income. First income done. Second income, any income derived from such land. Derived from such land means which land? Situated in India and used for agriculture. Such land means land which is situated in India and used for. From that land, what income is derived? Income from agricultural operations. Income from agricultural operations. Income from processes ordinarily employed to make the produce fit to be taken to market. And income derived from such land from sale of agricultural produce. and this agricultural produce will be sold by cultivator or sold by receiver of rent in kind. So either the cultivator will sell the agricultural produce or the receiver of rent in kind will sell the agricultural produce. See, you are deriving income from what? Agricultural operations. How many types of operations are there? Agricultural operations, two types. One, basic operations, and number two, subsequent operations. So if you perform any basic operations on the land, like plowing the land, putting fertilizer on the land, putting the seeds on the land, all these operations are directly performed on the land. So any operations which are performed on the land directly are known as basic operation, making the land ready for agriculture. Yes or no? So all those operations are known as basic operations. Once the basic operations are finished, and in continuation to those basic operations, other operations are later on performed. Those are subsequent operations. When the seeds gets germinated and when the seeds come out as plant, then whatever operations later on performed are known as subsequent operations. So if you are an assessee earning any income by such agricultural operations, so you are involved in these agricultural operations, and from these agricultural operations whatever income you are earning, those incomes will also be treated as your agricultural income. Or you can perform some processes, which are ordinarily required to make the produce fit to be taken for market. Usually when the agricultural produce is harvested, so after harvesting they are not directly sold in the market. There are certain processes which are required to be performed to make the produce fit to be taken to market. But these processes don't change the characteristics of agricultural produce. For example, wheat has been grown. So that wheat which is grown, after harvesting it will directly go to the market? No. Threshing will be done, drying will be done, cleaning will be done, sorting will be done. All these are processes which are ordinarily employed by all the farmers to make the wheat a saleable commodity in the market. Its essential characteristic does not change. It still remains wheat. Yes or no? But if I convert that wheat into Ashirwad atta, essential characteristic is change, then that process is not an ordinary process, then that process is manufacturing process. Hello sir. Tomatoes, I am growing tomatoes. Now after growing, I will pluck them, I will sort them, I will grade them. Yes or no? I will put them in crates. All these things are required, ordinarily required to make these tomatoes saleable in the market. So these are the processes. So if you are involved in those processes, which processes are ordinarily required to make the agricultural produce fit to be taken to markets. So from these processes also, if you are earning some income, that income will be your agricultural income. And once the farm produce is ready to be taken to market, you will sell the farm produce. Yes or no? By sale of the farm produce, whatever income you get, that income will also be your agricultural income, provided you are selling it as cultivator or receiver of rent in kind. Now what is this receiver of rent in kind? For example, I have a land. That land I have given you on rent. You are a farmer and you are using my land for what? Agriculture. I told you that give me monthly rent of 5,000. If you are giving me monthly rent of 5,000, that will be my agricultural income. Point number 1. Yes or no? But you are not able to give me 5,000 rupees monthly rent. So what are you saying? That sir, I will be growing some farm produce on your land. Whatever farm produce I will grow, out of that half I will give you in the form of rent. So am I getting rent? Yes, but I am getting that rent in the form of farm produce. That is, I am a receiver of rent in kind. So half of the farm produce which I am receiving as rent in kind, will I keep that entire farm produce? No. I will sell that farm produce in the market, and to me also, whenever I will sell that farm produce in the market, whatever income I will get will be my agricultural income. Yes or no? So how many incomes are covered? 1, 2, 3 and 4. And now next income, fifth income. Income from a building, from a which is situated on or in the immediate vicinity of such land. Such land means which land? No. Land which is situated in India and used for agriculture purpose. Yes or no? On that land or in the immediate vicinity of that land, if some building is situated, but that building and used for agricultural purpose. So that building is also to be used for agriculture purpose. So I have one building which is situated on agricultural land. Yes or no? Or in the immediate vicinity of agriculture. Immediate vicinity means nearby that land. Okay. And that building is also used as what? Used for agriculture, to store my agricultural produce, to store the equipments also. Yes or no? Or it can be used as a dwelling house. Okay, sometimes I stay at my farm in this building to take care of my farm produce. So that building is used for the purpose of agriculture, but that building should be situated on my land or in the immediate vicinity of that land. So whatever income from that building will be there, that income will also be treated as agricultural income. Hence this building is not covered by income from house property head. Hence this type of building is kept outside the house property head. Why? Because whatever income from that building is there will be treated as agricultural income. Hence the annual value of this building is not taxable under the head house property. Did you see any of these kind of buildings in your house property head? No. Why? Because the income of this building is treated as agriculture income, fully exempt. But this building is situated on a land. Situated on a, if the land is urban land, if the land is, and if the land is rural land. Now I will not tell you what is urban land, what is rural land. I have already explained in the capital gains chapter only. Yes or no? So if the building is situated on urban land, then the land must be assessed to local taxes or land revenue. Local taxes or land revenue. And if the building is situated on rural land, then the land may or may not be assessed to local taxes or land revenue. Are you getting it? Hello? So the land is urban land. Land is urban land. That land must be assessed to local taxes or land revenue. On this land or in the immediate vicinity of this land, if the building is situated, then only the income of that building will be treated as agricultural income, provided that building is also used for agriculture. If the land is rural land, then land may or may not be assessed to local taxes or land revenue. On the rural land, if any building is situated, or in the immediate vicinity of this rural land, if the building is situated, then the income of that building will be treated as agricultural income, provided the building is also used for agricultural purpose. Yes or no? Next one, last income, last income. Income from nurseries. So in the nurseries, what do? You sell seedlings and saplings. So whatever seedlings and saplings, etc., you will be selling in nursery. That will be income of your nursery. Even that income will be agricultural income. So how many incomes you have seen? 5 incomes. How many incomes? If you see any of these incomes, only then these incomes will be treated as agricultural income. Now, if the activity is performed on the land which is situated in India, what did I say? Activity is performed on the land which is situated in India and used for agriculture. All those activities will not be treated as agriculture. Sometimes on my farm, I am rearing some farm animals like cattle, etc., for my dairy farming. So I am doing dairy farming. I am doing poultry farming. I am having fisheries on my farms. Will those activities be treated as my agriculture? No. So any income, even though it is connected with my agricultural land, will not be treated as agriculture. Will not be treated as my agricultural income just because it is connected with that land. Yes or no? It has to be only that income which is covered under these points. Yes or no? So if I am doing dairy farming on my agricultural land, so that income from that dairy farming will be my agriculture income? No, it is my PGBP income. It will be taxable. If I am doing poultry farming on my agricultural land, so income of that poultry farming will be my agriculture income? No, it will be my PGBP income. I am having a big pond from where I take the water for my farm. So on my farm, huge farm I am having. So in that huge farm, there is a small pond I have created. From that pond, all the water for irrigation I am taking. But along with that, I am doing some fisheries business also. I am breeding the fishes in that pond. Even though that pond is there on my agricultural land. Yes or no? But in that pond, whatever activity I am doing, activity of fisheries, is not my agriculture. I am not sowing fishes. Trees are growing on that trees, fishes are there. Yes or no? So this is not agriculture. Getting my point, everyone? So will you remember all these incomes? Now one small important thing I would like to bring to your notice. Number 1, income from transfer of urban agricultural land will not be treated as agricultural income. Accordingly, will it be exempt under section 10 subsection 1? The answer is no. That income will not be treated as my agriculture income, will not be exempt under section 10(1). That will be taxable. That will be taxable under the head capital gains. That is the reason why urban agricultural land is still your capital asset. Yes or no? And any income from transfer of rural agricultural land, rural will be treated as my agricultural income, which will be exempt under section 10(1). And accordingly it will not be taxable under the head capital gains, and to not charge this income under the head capital gains, rural agricultural land is not treated as a capital asset, if you remember. Yes or no? So this was your agricultural income. Okay. Now the second part. See, sometimes it might also happen that a composite activity is going on. Composite activity. Now this is an assessee. An assessee is doing this composite activity. What is a composite activity? Here he is doing cultivation also. Cultivation means farming also, growing the farm produce. Instead of growing and selling the farm produce in the market, he is using that farm produce for his own manufacturing. Meaning, along with the cultivation, he is also doing some manufacturing. He is also doing some manufacturing. So two activities are done together. Cultivation as well as, so manufactured item, to manufacture some goods, raw materials are required. Those raw materials are agricultural produce, which he is not buying from the market. He himself is growing that raw material. So he is cultivating. Best example, I am growing sugarcane. If I sell that sugarcane, entire income will be agricultural income. But instead of selling that sugarcane, I have a small sugar factory. In that sugar factory, all the grown sugarcane I am bringing and converting them into sugar. So what I am doing? Cultivating sugarcane and converting it into sugar and selling what? So now sale of sugar will give me an income, give me a profit. That profit is from one activity or composite activity. So that profit will be from cultivation and manufacturing. Yes or no? I am growing potatoes and converting them into potato chips and selling potato chips. I am a kisan. Kisan means farmer. I am a kisan. I am growing tomatoes and converting those tomatoes into kisan tomato ketchup. Possible or not? There are thousands of items. Thousands of items. I am growing wheat, converting that wheat into Ashirwad Atta. Hello. For example, I am growing tea leaves, converting those tea leaves into manufactured tea. Yes or no? Many things are there. So now, whenever there will be a composite activity, from that composite activity, you will have to first calculate profit. That entire profit is not related only to manufacturing. That entire profit is not related only to cultivation. Some profit is related to cultivation, some profit related to. So the profit which is relating to manufacturing will be taxable under the head PGBP, and the profit which is relating to cultivation activity will be fully exempt under section. But how much profit? How much profit for manufacturing? How much profit for agricultural income? Fully exempt. How will you bifurcate? First you will have to calculate the profit. First you will have to calculate the, so you will have to first calculate the profit. How will you calculate? Simple. You will take sale proceeds. Sale proceeds of what? Finished goods, manufactured item. Yes or no? So sale proceeds of finished goods minus, is it the income from only one activity or after doing two activities? After doing two activities, I am getting this one income. So from this one income, I will reduce the cost relating to both the activities. Yes or no? So can I say less? Cost of what? Cultivation. Meaning the cost relating to my agriculture. Then I will less cost of manufacturing. These are the direct expenses which I incur on cultivation as well as manufacturing. Then less all expenses, all indirect expenses. Indirect expenses like commission, rent, then salaries, these, that, many other expenses might also happen. Yes or no? All the indirect expenses related to cultivation as well as manufacturing. Yes or no? And allowable as per PGBP provisions. So for these expenses I will have to see that whether these kind of expenses are allowable under the PGBP head or not. Yes or no? All those expenses. So first I will reduce cost of cultivation, then I will reduce cost of manufacturing, all the indirect expenses. Then one more thing, including, I will write down including depreciation on assets. These assets, whether used for cultivation or manufacturing, any assets, yes or no, on those assets the depreciation will be calculated and that depreciation will also be reduced. So now what is happening? Now I will have one profit. Now I will have one profit. This profit is nothing but my composite income. Composite income. This is composite profit. Now is it a profit of only one activity or both the activities together? Both the activities. Out of this profit, some profit will be my agricultural income, will be fully exempt, and some profit will be my PGBP income, will be fully taxable. Yes or no? Yes or no? So out of this, how much will be agriculture and how much will be PGBP? 60, 40. If the composite activity is growing and manufacturing tea. So this is given in Rule 8. So as per the Rule 8 of income tax rules, whatever profit is calculated, out of that profit, 60% is related to agriculture, exempt. 40% related to business, taxable. But if it relates to, if this composite income relates to growing and manufacturing tea, growing and manufacturing. Now, Rule 7A. Rule 7A talks about growing and manufacturing rubber. Growing and manufacturing, lot many rubber plantations etc. are there. From that, raw rubber is extracted and that raw rubber in liquid form will be converted into manufactured rubber, latex, Cenex, different types of rubber blocks. Yes or no? Then from this activity, whatever composite income is there, that will be classified into 65% and 35%. And then there is Rule 7B. 7B talks about growing and curing coffee beans. Only the growing and curing of coffee. Curing is also treated as a manufacturing process. Yes or no? So 75% and 25%. Then growing, curing, roasting and grounding of coffee into powder. Yes or no? That activity 60% and 40%. Now you will have to remember these rules and you will have to remember these percentage. Higher percentage agricultural income, lower percentage PGBP income. But this percentage you are going to calculate only after calculating your composite income. And composite income you are going to calculate like this. Yes or no? Will you be able to do it? Yes or no? Now, only tea, only rubber, only coffee. What about other products? For each and every product, prescribing this percentage will be a foolishness. So, there is one rule. Rule 7. Rule 7. Every other product will be covered by Rule 7. Tomato into tomato ketchup, Rule 7. Potato into potato wafer, potato chips, Rule 7. Hello? Wheat into atta, Rule 7. Fruits into fruit juice, Rule 7. Rice into paddy into rice, Rule 7. Everything will now be covered into Rule 7. Sugarcane to sugar, Rule 7. Sugarcane to jaggery, Rule 7. Everywhere now you will apply Rule 7. Only 3 different rules are there. Number 8 for tea, 7A for rubber, and 7B for coffee. If it is tea, 60-40. If it is rubber, 65-35. If it is coffee, grown and cured, then it is 75 and 25. And if it is coffee, grown, cured, roasted and grounded into powder, yes or no, then it is 60-40. For every other product, you are supposed to follow Rule 7. Now in Rule 7, what you are going to do? You are supposed to follow the same thing. Okay. Pay attention. Huh? Copy and paste. You are supposed to follow the same thing. Okay. Now can you see in rule number 7, if I am following the same thing, can you see cost of cultivation over here? I will not take cost of cultivation, I will take fair market value of agricultural produce of my farm, which I am using as raw material. So instead of cost of cultivation of my raw material, what I will take? Fair market value of my raw material. This will take care of two things. My cost of cultivation will also be covered, and my cultivation related profit will also be taken care of. Hello sir. So the finally whatever income will be remained, no, that will not be my composite income. Why? Because profit relating to agriculture I have already reduced by reducing the fair market value. See, if sugarcane I am growing, if I am growing sugarcane, instead of using this sugarcane in my manufacturing process, if I would have sold that sugarcane in the market, nearby agricultural market, what amount I would have got by selling that sugarcane in the market? Yes or no? That will be my fair market value. So what is the market rate of sugarcane which I have grown? That market rate which I would have got by selling the sugarcane would have covered my cultivation cost also and cultivation profit also. So that fair market value takes care of two things. Cultivation cost also is covered, and profit relating to cultivation means my agricultural profit is also taken care of. And as a manufacturer, if I was not growing sugarcane, I would have gone in the market and I would have bought the sugarcane as my raw material. At what amount? At the same amount only, no? So now consider yourself as a manufacturer. Consider yourself as a, if you would have gone in the market and bought the sugarcane as your raw material, as a manufacturer, how much you would have paid to the cultivator? Same amount which you would have got as a cultivator. Getting my point? Now this thing will take care of your profit relating to agriculture. So now whatever amount will remain, you will not have to split this amount. This entire amount will now be treated as your PGBP income. Yes or no? Will you remember this? This is second part of this chapter. Done. Okay. Now third part. Now there is a concept of partial integration. What concept? Partial integration. Sir, what is the meaning of partial integration? I will tell you, don't worry. But first of all, understand this concept of partial integration will be applicable only if the assessee is a person to whom slabs are applicable. Slabs are, meaning the assessee is liable to pay tax at progressive rates. Up to some amount, no tax, then a little bit more tax, then little bit more tax, then more. So the rate of tax is progressive. Which type of assessees have progressive rates? Individuals. HUF. Hello. AOP, BOI. AJP have the progressive rates of tax. Which type of assessee does not have progressive tax? They have flat rate. Companies, flat 30%. Partnership firm, flat 30%. LLP, flat 30%. Yes or no? So the concept which you are learning right now, partial integration, is applicable only for those assessees for whom the tax rates are given in slabs. Tax rates are given in slabs. Meaning individual, HUF, AOP, BOI, AJP, they are the assessees for whom this concept you are learning. Yes or no? Now this concept will be applicable to these assessees if their net agricultural income, is greater than equal to 5,000 rupees. Greater than equal to, and their total income is also greater than their basic exemption limit. So if they are following 115 BSc, then basic exemption limit 3 lakh. If they are not following 115 BSc, then their basic exemption limit will be 2 lakh 50. If they are senior citizen, then it will be 3 lakh. They are super senior citizen, then it is 5 lakhs. Yes or no? If these three conditions are fulfilled in the question, are you an assessee? Yes. Slab rates are applicable to you? Yes. Oh, earning agricultural income also exempt under 10(1). How much? More than or equal to 5,000. Oh, sorry, not more than 5,000. Yes, more than 5,000. And you are liable to pay tax also. Why? Because your total income is more than basic exemption limit. Now for these assessees, computation of what? Their tax liability will not be simple computation. To compute their tax liability in their total income, agricultural income will be integrated in order to make them pay tax at higher rates. If the agricultural income was not included, your total income was 8 lakhs. You are paying tax at 20% slabs. Agriculture income is 3 lakhs. In the 8 lakh, if you include 3 lakhs, now your total income will become 11 lakh. You will be thrown in the higher slabs. At the rate of 30% your tax will be calculated. So in order to compel you to pay tax at higher slabs, we will have to include your agricultural income. And don't worry, in your agricultural income, whatever tax is calculated on your agriculture income, that we will reduce later on. But in order to charge tax at higher rates, higher slab rates, we'll have to first include your agricultural income in your total income. So now 3 steps you are supposed to follow. How many steps? Step 1. Take total income. Take your total income. In that you will add your net agricultural income. Now this will give you total income including agricultural income. Okay, no? Now instead of directly calculating your tax on total income, you are supposed to calculate your tax on this total income. So you will calculate your tax. This will be your tax 1. This will be your tax 1. How to calculate this tax? On this total income. Some income will be special income, special rates. Balance income, including your agricultural income, on that you will apply normal rates or 115 BSc rates. Yes or no? Then special income, special tax, normal income, normal tax or 115 BSc tax, add both of them, you will get tax 1. Yes or no? Now don't you think that this tax 1 also includes the tax on your agricultural income? The tax on agriculture income you are going to calculate in step 2. Step 2. So what is your step 2, guys? You will take your net agricultural income again. And on this net agricultural income, if you are liable to calculate the tax, then directly if you will apply the basic exemption limit on this, what will happen? Up to basic exemption limit, the agricultural income will go. On that amount, the tax cannot be computed. Yes or no? So first do one thing, add your basic exemption limit here. Add your basic exemption limit. Yes or no? Now this is your agricultural income including basic exemption limit. If you will apply your tax rates on this, no, so basic exemption limit will go away and you will be able to calculate tax on your full agricultural income, because in step number 1 you have calculated the tax on full agricultural income. For example, your total income was 8 lakhs and your agriculture income is 3 lakhs. So you have calculated tax on 11 lakhs. While calculating tax on 11 lakhs, you have calculated the tax on full 3 lakh rupees of agricultural income. Getting my point? Now if you will direct calculate tax on 3 lakhs, if you will direct calculate tax on 2 lakh 50 will go in the basic exemption limit. So will you be able to calculate tax on full 3 lakhs or only 50,000? But you have to calculate the tax on the entire 3 lakhs. That is possible only if you take 3 lakhs, add 2 lakh 50,000 basic exemption limit. How much will be there now? 5 lakh 50. Now out of 5 lakh 50, 2 lakh 50 will be your basic exemption limit and you will be able to calculate tax on the full agricultural income of 3 lakhs. Getting my point? That is the reason why basic exemption limit is added in this tab. Getting my point? Now on this, if you will calculate your tax, this is going to give you tax 2. This is going to give you tax. Now in the step 3, what are you going to do? You are going to take tax 1. This is the tax on your total income including agricultural income. This is the tax on your total income including. So your agricultural income's tax is also there in this amount, which you have calculated separately in step number 2. Do one thing, less tax 2. This is just the tax on your agricultural income. Yes or no? This is going to give you tax on total income. Tax on. Now what will you do after this? Add surcharge if applicable, less rebate if applicable. Then you will get tax including surcharge or tax after rebate. The same process which we follow. Yes or no? But directly don't apply the tax rates on your total income, otherwise your answer will be wrong. You will have to do you will have to calculate your tax on total income by following these 3 steps. Getting my point? This is the concept of partial integration. Now in the question, if this concept is going to come, I want to see that whether this thing clicks in your mind or not. While solving the computation of total income question, they are going to tell you compute the tax liability also. If they are telling you to compute the tax liability, they are not going to tell you, Tambi, Tangachi, please follow partial integration. They are not going to tell you. That thing should click. That, oh, in this question, agricultural income is there and they are telling to calculate tax liability. Agriculture income is more than 5,000. Total income is more than basic exemption limit, and the assessee is a person to whom slabs are applicable. Ayyo, I will not apply the tax rates directly on total income. Step 1, step 2, step 3. It should immediately strike your mind. Otherwise your tax calculation is wrong. Will you remember this? Agricultural income is over. Agriculture income is over. Okay. Now this concept will test in the question. Okay. This concept with numbers will test in the question. Okay. Now see, now we are going to come to set off and carry forward. Which chapter? Set off, and second part is carry forward. First part is set off, second part is pay attention. Set off has two sections, section 70 and section 71. Section 70 and section 71, which talks about inter source adjustment. Inter source adjustment and section 71 talks about inter head adjustment. Every time I ask you, how many sources of income? You say 5. Then you say, no, multiple. Huh? The reason for asking that is hidden here. You have 3 house properties, meaning 3 sources of income under the head household. All those 3 sources will come under the head household. You have 4 businesses, 4 sources of income which will go to PGBP head. You have 1 bank account from which interest is coming, 1 open plot of land giving you rental income, 1 some shares from which you are getting dividend. You have 3 sources of income which will go to IFOS. 1 casual activity was also there which was giving you winnings. This is your 4th source of income under the head IFOS. You have 1 employer. He is also giving you some income. Another source of income under the head salaries. This year you sold 3 capital assets. 3 sources of income under the head. Every source first you will classify under respective head. Then under a particular head, first you will calculate the income of that source. Income of that source minus deduction. It will be profit or loss. Income of that source minus the deduction, it will be profit or loss. Income of that source minus the deduction, you will get profit or loss. When will you get loss? When the taxable income of that source is less and the deduction available from that taxable source is more. Then deduction being more than the taxable income results into negative income, that is known as loss. And by the way, loss is computed for the first time under a head for a particular source. So computation of loss happens for the first time for a particular source under a particular head. Loss is computed for the first time source, for a source. And when there will be a loss? When there will be a deduction available more than the taxable income of that source. House property 1, LOP. House property 1, municipal value, fair rent, higher compared with standard rent, lower will be expected rent compared with actual rent. You will get GAV minus municipal tax, you will get NAV. NAV is the taxable income of let out property. Now from this NAV, 2 deductions are available. 30% standard deduction and full amount of interest. Full amount of available or not? If these 2 deductions, amount of these 2 deductions are less, amount of these 2 deductions are less than this NAV, taxable income will be there. LOP is giving you taxable income. Second property, SOP, final income nil. But there was interest on housing loan up to 30,000 up to 2 lakhs. So did you claim that interest? Yes. Nil minus interest. Positive income or negative income? It is a loss from that source. Getting my point? Likewise, same thing will happen under PGBP, first business. All the incomes, main incomes, incidental income, deemed income, specific charge. You have taken all the incomes minus deductions under section 32, 37. Expenses, you have incurred many expenses, many. Total incomes of that business was 10 lakhs. And total deductions which you took was 11 lakhs. Profit or loss? Loss of rupees 1 lakhs. Under the head PGBP, there is a source, business 1, giving you a loss. Every time I have been asking you with this point of view, that whenever I am going to tell you this, no, immediately the thing should be, stuck in your mind. Source level, the loss is calculated for the first time. The loss is calculated for the first time at source level. Within a particular head, a source will give you a loss for the first time. Now, tell me one thing, when you and your brother, you and your sister, if both of you fight, will you resolve your fight within your house? For example, a wife and a husband are there. If they are fighting, will they resolve their fight inside the home between themselves, or they will directly go outside? First, resolve the fight inside the home. Loss of any source under a head will be first set off against profit of another source within the same head. Section 70. First step. Sir, I want to follow the second step. That is available only if the loss cannot be set off within the head. Yes or no? Now what if I have one house property having a loss of 5 lakhs, having a loss of, for example, I have having one business having a loss of 5 lakhs. Another business I am having, this business might not have any income, or this business might have less income. For example, this business is having 3 lakh rupees of profit. So I tried to set off this 5 lakh loss against the income of this business. It could be set off up to only 3 lakhs. Still 2 lakh rupees of loss remaining. Is there any other source under the PGBP head against which this 2 lakh can be set off? No. Now this loss will become the loss of the head. Now this loss will become the loss of the head. Now this loss of a head can be set off against positive income of other heads. This is known as inter-head set off. Hello sir. If your mother and father, they are fighting, my mother and father, they are fighting, they will resolve the fight amongst themselves first. If the fight is big, then relatives will come. Inter-head set off. And if the fight is non-reconcilable, even the relatives cannot help out, meaning the loss cannot be adjusted in this year against other heads also, then you get the option to carry forward those losses to subsequent years. Which losses will be carried forward? All losses? No. 71B, loss of house property. Loss of house property. 72, loss of normal business. Loss of normal business. 73, loss of speculation business. Loss of speculation business. 73A, loss of specified business. Loss of specified business. And then 74, capital losses. Capital losses can be long term, can be short term. 74A, loss from an activity, of owning and maintaining race horses. I have told you about this. This activity might result into loss. Stake money you are getting, that is your income, minus all the related expense to run that stud farm. Related expense will always be there, but you may or may not earn stake money. Why? Because the stake money will be your income, that will be the only income of that activity which you may or may not earn. Why? For that your horses needs to participate in race. Just participate. They have to win also. What if they participate but don't win? There will be no income. But the deduction for losses will be allowed, resulting into losses. Yes or no? What if your horses are not ready to participate because they are yet being trained? So, will you earn any income? No, but the expenses will be there, will be resulting into losses because of the deduction. Getting my point? Hello, sir. Should I move? First point. What will you do first? If the loss is calculated for the first time in this year, what is your previous year? What is your previous year? 24-25. In 24-25, the loss is calculated for the first time. Loss is calculated for any source, for any. That loss will be adjusted within the same head against the profits of other source of income. Yes or no? That is section 7070. Hello? Are there any restrictions? Are there any restrictions? The answer is yes. You have to remember these restrictions. Number one. Let us go head wise. First head. Under the head salary. Can there be any loss? Say yes. Say no yes. I will ask for your SRO number. Under the head house property. Taxable incomes are many, but the available deduction is like peanuts, standard deduction. Then entertainment allowance, that too also maximum 5,000 if you are a government employee, and deduction for professional tax. The amount of deductions will be very less as compared to the taxable income under the head salary. So there are almost no chance that you will ever have a loss under the head salary. Forget about salary. How many heads are remaining now? Come to the second head. Which is the head? House property head. Remember house property head. How many house properties you can have? Multiple properties you can have. Can you have loss of any house property? The house property can be LOP, it can be SOP, it can be DLOP. Loss of any house property can be set off within the same head against the profit of any house property. No restriction. Second head, done. Third head. Third head, PGBP. Now, in PGBP there is a restriction. Loss of any speculation business can be adjusted within the head PGBP against the profits of any other speculation business only. It cannot be set off against profit of other businesses. Yes or no? First exception. Will you remember? Second exception. Under the head PGBP only. Loss of a specified business. Loss of a can be adjusted within the head PGBP against the profits of any other specified business only. It cannot be set off against profits of other businesses. Yes or no? Now please don't ask me the logics for this. Simple logic is there. Speculation, bright chances are there that there will be a loss. Knowing that this loss we cannot allow you against profit of other business. Do you have any other speculation business? Yes. We were thinking that from that business you are going to have a loss. But fortunately you had a profit. So if you will set off this loss against that speculation profit, no, we will not feel bad. But if you will set off this loss against other profits, we will feel bad. Hence, speculation only against speculation. Specified only against specified. Now my one question is there. Two businesses are there. How many business? Business A and business B. Both the businesses are specified business. Both the businesses are okay, no? Now tell me, for this business, no, you are getting 35 AD deduction, and for this business you are not getting 35 AD deduction. Yes or no? Why you are getting 35 AD deduction? Because the conditions of section 35 AD you have fulfilled. Okay. Now this business is giving you a loss, and you are not getting any 35 AD deduction for this business. Why? because conditions of section 35AD you might not have fulfilled. So for business B, you are not getting any, even though business B is a specified business, but for that business you are not getting any deduction under section, because conditions of 35AD you have not fulfilled. So this business is having a profit. Now my question, loss of a specified business can be set off only against profit of any other specified? Is it required that the profit of a specified business should be of that specified business which is also eligible for which is also for which 35AD deduction was available? Not required. Even if the business is a specified business, even if that business is not getting deduction under section 35AD, still the loss of a specified business can be adjusted against profits of any specified business, whether that business is eligible for 35AD deduction or not eligible, whether the 35AD deduction is allowed for that business or not allowed for that business. Yes or no? So they can fix you in this, in the exam. They will tell you that for business B, which is a specified business only, 35AD deduction was not available. And for business A, which is a specified business for which 35AD deduction was available, loss of this business is there, profit of this business is there. Now they will ask you whether this loss can be set off against this profit. The answer is yes. Loss of any specified business can be set off against profits of any specified business only, but that specified business should also get 35AD deduction. There is no requirement. Getting my point? Hello. First exception, speculation only against speculation. Second exception, specified only against specified. Yes or no? Now under the head PGBP, if there is a normal business, what if the normal business is having some loss? There is no restriction. Loss of normal business can be set up against profits of any profit of any business. Loss of normal business can be set up against profits of normal business. Loss of normal business can be set up against profits of speculation business. Loss of normal business can be set up against profits of specified business. Wait, now one doubt is coming. Should I ask you? This is business A. This is business A. This is your normal business. This is a normal business. This business is having some loss. This business is having some. Now this loss can be set off against profits of any business. Profits of. Now you are having other 4 businesses. How many businesses? 4 businesses. Business B, business C, business D, business E. Business B is a speculation business. Business C is a specified business. Business D is a normal business. Yes or no? And business E is also a normal business, but for this business the profits and gains are computed. Profits and gains are computed as per presumptive provisions. Do you remember? So for this business, the profits are not calculated normally. Profits are calculated as per presumptive provisions. Now tell me, loss of normal business can be set off against profits of. There is no requirement that the profit should be calculated by following normal provisions only. Profits can be calculated by following presumptive provisions also. So can it be set off against this? Yes. Can it be set off against this? Yes. Can it be set off against this? Yes. And it can also be set off against this. Even if the profits of other business are calculated by following presumptive provisions. Against this profit, loss will not be allowed to be set off. Tell me, will anyone follow this? No. So why to stop that? Getting my point? If they tell you that, see, for this business, if you have computed profits as per presumptive provision, against this profits, losses will not be allowed as a set off. You will say, go to hell. I don't want to follow 44 AD, 44 ADA. Then entire purpose of framing these sections will be wasted, no? If there is a restriction on set off of the losses against this type of profits, getting my point? So any normal business loss can be set off against profits of any business, even if the profit of that business is calculated by following presumptive provisions. Against those profits also the business loss of normal business can be set off. Yes or no? Hello? So this was your exception number 2. First of all, first head was salary, forget about it. Second head, is there any exception under house property head? No exception. Any loss of any house property can be set off within the same head against profits of any house property. There is no restriction that LOP loss will be set off only against LOP. It cannot be set off against DLOP. SOP loss will be set off only against SOP. Bloody, there will be no SOP income only. Getting my point? So SOP loss can be set off against LOP or DLOP. LOP loss can be set off against DLOP. DLOP loss can be set off against. There is no restriction there. Yes or no? Restriction will start coming from PGBP. Speculation, only against speculation. Specified, only against specified. Normal business loss, no restriction. Set off against any profits. Any. Whether the profits are calculated as per normal provisions or presumptive provision. Whether the business is normal business, speculation business or specified business. There is no restriction. Will you remember this? So while solving the question, this thing should be kept in mind. Now next head is, third head is done. Next head, very easy, you know. Long-term loss of any capital asset can be set off only against long-term gain of any capital asset. No need to match the asset also. Long-term loss of jewelry will be adjusted only against long-term gain of jewelry. Long-term loss of shares can be set off against long-term gain of land. Long-term loss of jewelry can be set off against long-term gain of shares. Any long-term loss of any capital asset will be set off against long-term gain only of any capital asset. Yes or no? Wait, there is no such restriction on short-term loss. Short-term capital loss of any capital asset, short-term capital loss of any capital asset can be set off against short-term gain of any capital asset as well as long-term gain of any capital asset. Done. Only one restriction in capital gains. Long-term only against long-term. Yes or no? But there is no restriction on short-term. Short-term loss against short-term gain also. Short-term loss against long-term gain also. Now, wait. What I am telling that there is some short-term capital loss. Okay. There is some short-term capital gain. There is some long-term capital loss and there is some long-term capital gain. Okay. Now pay attention. Very important thing I am telling you. Short-term capital loss of 4 lakhs. 4 lakhs. Short-term capital gain of 2 lakhs. Okay. Now long-term capital loss of 2,50,000 and long-term capital gains of 2 lakhs. Short-term can be adjusted against short-term gain as well as long-term gain. So what you did, 4 lakh you adjusted from here also and here also. Entire 4 lakh loss is gone. Now do you still have long-term loss? Now can it be set off? Can it be set off? Why? Because you exploited the entire long-term gain. Now even if there was long-term gain against which the long-term loss could have been set off, is no more there. So before setting off your short-term loss against long-term gain, try to set off long-term loss against long-term gains first. Yes or no? So can you set off 2,50,000 against 2 lakhs? So this 2 lakh will go away. This 2 lakh will. How much loss will still remain? 50,000 will stay here. Yes or no? This will stay. Now set off this against 2 lakhs. Still some loss remains. Now see, if any other long-term gain is there, no, against that this still can be adjusted. But if the remaining amount of long-term loss was there, yes or no, what if entire long-term gain is set off right now? Entire long-term gain is gone right now. Entire 2,50,000 will remain right now. And what if it will be carried forward for 8 years? What if no long-term gain is there in the next 8 years? You will lose your entire 2,50,000 of long-term loss. Getting my point what I am trying to tell you? So first try to set off the identical losses. Try to set off the first set off long-term against long-term. First set off long-term against long-term. Yes or no? Then if some long-term gain will remain, against that you can set off the short-term loss also. Yes or no? And then set off short-term against short-term. If some short-term loss still remains, that short-term loss can still be set off against your long-term gains. But it cannot happen for long-term loss remaining. Getting my point? Hello, sir. So this was your fourth head. What is the fifth head? IFOS. First point you know. Loss from an activity of owning and maintaining racehorse. Under the head IFOS. It cannot be set off against income of other sources. If you have any other activity of owning and maintaining racehorse, and if that activity is having a profit, against the profit of similar type of activity, this loss can be set off. Now, for example, under the head IFOS, under the head you have one source, source 1, source 2, source 3. Source 1 is activity of owning and maintaining racehorse, and this is also a same activity. This is also a same activity. And can I say this is any other activity? Any other activity? For example, you are earning bank interest. For example, dividend is there. Hello. For example, rent from plant, machinery, furniture is there. Yes or no? It can be any source of income. Now tell me, loss of this activity can be set off against this. Loss of this activity can be set off against this. But the loss of this activity cannot be set off against profit of any other activity. Getting my point? So even if there is a 4 lakh rupees of loss here and there is a 3 lakh rupees of income here, this 4 lakh can be set off against 3 lakhs. So 3 lakh will go and this loss will still remain 1 lakh. Now even if you have 10 lakh rupees of income from this source, loss of an activity of owning and maintaining racehorse cannot be set off under the head IFOS against any other source of income. This is a restriction. You will have to remember. Yes or no? Hello, sir. But wait. Now tell me, how much was the loss? How much was the loss? 4 lakhs. How much is the loss here? 10 lakhs. How much is the loss here? And this is 6 lakh rupees of income. Can this loss be adjusted against this? Entire loss gone. How much income will remain? Now my question, can this loss be adjusted against this income? Yes, there is no restriction. Loss of any source of income under the head IFOS can be set off against profits of any source of income, including activity of owning and maintaining racehorse. But the loss of this activity can be set off against profit of same type of activity, not against any other source of income. Getting my point? Hello. Only one exception. Loss of an activity of owning and maintaining racehorse can be set off under the head IFOS against the profit of same type of activity. That's it. This is the only exception. But remember, if loss of any other source is there, loss of any, it can be set off against profits of all sources of income under the head IFOS, including the income of activity of owning and maintaining racehorse. Got it, sir? Hello. But wait. This source 3 is my no losses can be set off against. Can you set off this loss? Can you set off this loss? This loss can be set off only against the profit of same activity. Do you have any same activity here? So this loss cannot be adjusted within the head. This loss cannot be adjusted within the head. What you will do? You will try to set off against other heads. Second step is interhead. Yes or no? So you will try to set off against other heads. From other heads also it cannot be set off. Restriction there also. So you will directly carry forward this loss as per section 74A. This here within the head cannot be set off. Interhead set off not possible, not allowed only. Yes or no? So that loss cannot be adjusted in this year. So loss of an activity of owning and maintaining resource can be carried forward as per section 74A. Yes or no? Now tell me. Do you have this loss? There is no restriction. No, it can be set off against profits of any source. So do you have any source? Yes, you have a source giving you a income. You try to set off this loss against this. Not possible only. Because no losses can be set off against winnings income. So this year your taxable income from other sources will be 6 lakhs. And there are 2 losses under the head IFOS which cannot be set off in this year. Wait. One loss 4 lakh. This will be carried forward. What about this 10 lakhs? It cannot be set off within the same head, but it is your normal source, no? Interhead set off will be allowed. Interhead. But if interhead no other income is there, then there is no provision for carry forward of IFOS loss. Which loss can be carried forward? House property. Then normal business. Then speculation business. Then specified business. Then capital loss. Then where it is written that loss of IFOS head will be carried forward. There is no provision for carry forward of those losses. For example, here if I am having income from salary, income from salary was 3 lakhs, and I am also having income from house property, that is 2 lakhs, and I am also having PGBP amounting to 1 lakh. Now first of all tell me, IFOS head, this 4 lakhs cannot be adjusted. I will directly carry forward. Why? Within the head only the adjustment is possible. Within the head only the adjustment is possible against same type of activity. Do you have any same type of activity giving you income? No. So this loss cannot be set off within the head. Now when you will try to set off this loss against other heads, not allowed. Exceptions under section 71. Under section 71, interhead set off. Exceptions are there. The loss of an activity of owning and maintaining resource can be set off within the same head. Its interhead set off is not allowed. So you cannot set off against other heads, even if you are having other heads income. Yes or no? It cannot be set off against other heads also. So what is the last option? You will carry forward. And carry forward of this loss is allowed. Separate section is there. Which section? 74A. Yes or no? Directly carry forward. Now tell me, source 2 having how much loss? Having how much loss? 10 lakh rupees loss. This 10 lakh rupees loss can be adjusted within the same head against any source of income. Activity of owning and maintaining resource giving you income, yes, from that also it can be adjusted. Any other source giving you income, against that also it can be adjusted. But sir, this activity is not giving me profit. So this 10 lakh cannot be adjusted against this activity income. So 10 lakh can be set off against income of any other source, but that source should not be winnings, because against winnings no losses are allowed as a. So now tell me, what will be the final taxable income of your IFOS head? 6 lakh, and that entire 6 lakh will be your winnings income. Now this loss could not be adjusted within the head. So now the second step will be interhead. So is there any restriction that this loss cannot be adjusted against other heads? No, there is no restriction. So we will definitely set off this loss against any head of income. Against? Can it be set off against salary? Full 3 lakh salary gone. Can it be adjusted against house property? Full 2 lakh gone. Can it be set off against PGBP? Yes, full 1 lakh gone. Now, is there any taxable income remaining here? No. Nil, nil, nil. Why? Because all these incomes were used to set off this 10 lakh. And still 10 lakh rupees, still some loss is remaining. 4 lakh. After doing interhead set off, now there is no head remaining against which this 4 lakh can be set off. So it can be carried forward, but to carry forward this loss, specific provision should be there. Only carry forward of house property loss is allowed. Carry forward of normal business loss, carry forward of speculation business loss, carry forward of specified business loss, carry forward of capital loss, carry forward of loss from an activity of owning and maintaining. This is none of those loss. Only inter-source, not possible, then interhead, and if it cannot be set off against interhead also, then it will lapse. There will be no carry forward of these type of losses. Got it, sir? Hello? Section 70 done. Now 2 important things to remember. If this activity, if this has given you 6 lakh of income, can I say this activity or similar type of activity would have given you loss also? This activity or similar activity giving you winnings income would have given you loss also. You are betting on horse race, 5 lakh rupees. Did your horse win? No, lose. So you lose 5 lakhs. Activity where you are doing gambling, you are doing betting. If you win, will give you winnings income. But are you winning or you are losing? How much you lost? That 5 lakhs can be adjusted against this 6 lakh. That is a dead loss. What will you call it? Dead loss. No set off, no carry forward available for such type of losses. Yes or no? Directly you will ignore. Directly you will ignore. Yes or no? Now, one more important thing. If any source is there, if that source is giving you positive income, if that source is giving you, then that income is exempt. That income is, this same source can give you negative income also. Then that negative income will also be ignored. That negative income cannot be set off or carry forward. No carry forward or set off will be allowed for these type of losses which are coming from a source whose income is normally exempt. Best example is agricultural income. Net agricultural income after claiming the deduction for all the expenses is fully exempt under section 10(1). Net agriculture. So agriculture from a land situated in India, from that whatever positive income comes after claiming the deduction for expenses and all, net agriculture income is fully exempt. Can that same activity result into loss? Yes. This year there was no farm produce. There was no much of the farm produce. Because of what? Floods and irregularities in monsoon. I had to incur more expenses as compared to the income. So instead of earning a positive agricultural income, this year's negative agricultural income is there. Can I set off that loss against any other taxable source of income? The answer is no. Supreme Court judgment is there. And this is the law. That if any source of income is giving you a positive income, and if that positive income cannot be taxed because it is exempt, then if that same source gives you a loss, that loss cannot be set off against any taxable source of income. You will have to ignore those losses. Will you remember this? This is section 70 over. Now, if the loss cannot be adjusted while doing the inter-source adjustment within the same head, you are supposed to keep these things in mind. These exceptions in mind, yes or no? But if even after taking care of these exceptions, even after following the provisions of section 70 to set off the loss within the same head, the loss could not be adjusted within the same head, then the loss will be eligible for inter-head set off. Then the loss will be eligible for inter-head set off. First head, salary. Will there be any loss of salary head? No, forget about it. Second head, can there be a loss of house property head? Absolutely yes, you can have. Absolutely you can have. House property 1, house property 2 and house property 3. First house property SOP, 2 lakh rupees loss because of interest. Second house property LOP, okay, no, having 1 lakh rupees of income, positive income. And third house property also SOP, also having 30,000 rupees of interest, having 30,000 of interest. Tell me, first house property, it was SOP. Second house property, it was LOP. Third house property, this was also SOP. Here, what was the interest? And here, what was the interest? Interest 2 lakhs, interest 30,000. Yes or no? So because of this interest, there will be a loss of 2 lakh, and because of this interest, there will be a loss of. Possible or not possible? Not possible, never possible. Because if one SOP or both the SOPs taken together, the total interest cannot be more than. I just wanted to see this. And I am the one who has taught you this while doing house property. 22 lakh and 30. Total loss of both the house properties? Very good. Interest for first property maximum 2 lakh. Interest for second property maximum 30,000. See, the interest here was 2 lakh 20,000. 2 lakh. Interest here was 45,000. So this interest cannot be claimed more than 2 lakhs. So how much interest will be allowed here? 2 lakh. This interest cannot be claimed more than 30,000. So how much will be allowed? 30. But both the SOPs taken together cannot be more than. So the total loss for these two properties taken together cannot be more than. Now this property is having a profit of 1 lakh. Try to set off. Will you be able to do it? Yes. This 2 lakh will be adjusted against 1 lakh, and still there will be a 1 lakh rupees of loss. Still there will be a 1 lakh rupees of loss. Now, do you have any other house property having a positive income? No. Now this loss will become loss of your house property head. This loss will become the loss of house property head. Is there any restriction? No restriction. It can be set off against any head. It can be set off against up to maximum 2 lakhs. How much is the amount? Is it less than 2 lakhs? Full loss can be set off against any head. Against. Only if you don't follow 115 BAC. Loss of house property head can be set off against any head up to maximum inter-head. We are talking about inter-head. Inter-head set off is allowed against any head to the extent of maximum. But you can do this only if you don't follow 115 BAC. What if you follow 115 BAC? Wait, what if you follow? This is not allowed, this is not allowed. SOP interest is it allowed? Why are you claiming? So will there be any loss? No, nil, nil. How much is the income? That will be your house property head income. Yes or no? But wait. Can your LOP still give you a loss? Can your LOP still give you a loss? Yes. Because for LOP and DLOP, interest will be still allowed even if you follow 115 BSc. Yes or no? Now after claiming interest and all, there was, see, wait, you cannot claim this, you cannot claim this. Means for SOP, how much is income? Nil. For SOP, how much is income? Nil. But here, instead of 1 lakh rupees of income, can I say it is 1.5 lakh rupees of loss? Why? Because for LOP or DLOP, under the head house property, even if you follow 115 BSE, interest is fully allowed. Interest is. So will you claim interest deduction and all? You have claimed interest deduction and all. After claiming interest deduction from LOP, your LOP is giving a loss of 1,50,000. Now tell me, this loss can be adjusted within the same head. There is no restriction. There is no restriction. Within the head, loss of any house property can be set off against profit of any house property. For example, you are having one more property, house property 4. House property. Now this house property is having 60,000 rupees of income. Let me H1, H2, H3, H4. This is DLOP. This is SOP. This is SOP, and this is LOP. SOP. Interest was 2.2 lakhs. It was 45,000. Subject to 2 lakhs. Subject to 30,000. Whichever is lower. Here and here. Tell me. 2 lakhs or this will be 30,000. But both taken together cannot be more than maximum 2 lakh rupees loss can be there. But you are not going to do this. Why? Because you are following 115 BSE. If you follow 115 BSE, under the head house property, you cannot claim interest of SOP. But can you still claim interest of LOP and DLOP? Can you still claim interest of LOP and DLOP? Yes. There is no restriction. So you claimed interest and all. And here you are having a loss of 1.5 lakhs. And here you are having a profit of 60,000. Are you following 115 BSE? There is no restriction on inter-source adjustment. Meaning that loss of any house property within the same head can be adjusted against profit of any house property. So can you set off this 1.5 lakhs against 60? So this 60 will go, this 1.5 will become 90. Still 90,000 loss is there. Now can I say your income from house property is having a loss? Loss of rupees? Is it within 2 lakh rupees of limit? Is it within 2 lakh? So, sir, loss of house property up to 2 lakh can be adjusted against any head. Only if you don't follow. Are you following 115 BSE? This loss will not be allowed to be set off against other heads. Cannot be set off against other heads. Up to 2 lakh, the set off was allowed, will not be allowed. Sir, then carry forward. No carry forward also allowed. No. So, inter head set off up to 2 lakhs. Up to will not be available against any head. Against any head will be available or will not be available. And no carry forward also. Why? Following BAC means bakwas. Bakwas in Hindi, in English it means bullshit. Real meaning, I am telling you. BACWAS is silent. When Mrs. Nirmala Sitharaman was making this section, no, let us do some bakwas. So 115 BSE, no, don't write WAS. People will understand. WAS silent. Section is bakwas. If you follow this section, bloody you are going to lose so many things. Additional depreciation you don't get. You don't get deduction under section 35 AD. Scientific research, donations also you are making, you are not getting the deduction. Hello? Then many exemptions and deductions like HRA exemption you are not going to get. This deduction you are not going. And on top of that, SOP interest we will not allow. If you want to claim LOP, DLOP we will allow. But indirectly, if it is going to give you a loss, because of that now the loss will come. Now the loss will come because of LOP, DLOP interest. Yes or no? Now that loss, if it results into a loss, that loss within the same head you adjust. But it was adjustable up to 2 lakhs against other heads and excess used to be carried forward. Yes or no? No. This loss will not be adjusted against other heads also, and this will not be allowed for carry forward also. Bakwas. Bullshit. Understood? This is the only tricky point in this entire chapter. Only tricky point where you are supposed to be very careful. And trust me, in January 26, mark my words, there will be one question. In that question, this same exact concept will be there. Either it will be in your MCQs or it will be a small set of and carry forward question. In that question, you are going to be asked regarding this concept. Getting my point? Because many of the students commit mistake in this part in this chapter. Did you understand? Understood or not? Now, next one. I'm again and again telling you, watch all my questions, which I have solved. You'll get huge clarity. If you want to pass in my paper, no, you watch all my questions. Otherwise, these tricky points, how to approach them in the question, you have understood the concept right now, but till the time you will not solve it practically, it is not going to help you out. After some time you are going to forget. Just like the way yesterday I taught 46A evaporated. Okay. Now tell me, first head, salary, done. Second head, loss of house property head. Loss of can be set off against any head up to maximum, but this is not allowed if you follow 115 BS. See, setting off the loss of house property within the same head against income of any house property will be allowed even if you follow 115 BSE. But setting off the loss of the house property head against other heads up to 2 lakhs will not be allowed. Okay? And it will not be carried forward also. That loss will lapse. Okay? Now next tell me one thing. Next head is PGBP. Speculation only against? Possible only under the head PGBP. Will you get any speculation income under other heads? So, inter-head set-off of speculation loss not allowed. Inter-head set-off of speculation loss not allowed. What will you do? Directly carry forward. Directly as per section 73. Yes or no? Now wait. Second, specified business. Only under the same head against the profits of any other specified business. You will not have profits of specified business against in the other heads. So will you be able to set off the loss of specified business against other heads? No. So inter-head set off of specified business loss is also not available. It will be directly carried forward. If within the head set off, then okay. Against other heads it is not allowed. Okay. Now what about the normal business loss? Under the same head, it can be set off against any business income. If not done, then it can be set off against other heads also. There is no restriction except salary. So your business loss of this year within the same head against any business you can set off. But if it cannot be set off within the same head, now it will become the loss of your business head. Now your loss of business head is from normal business, It can be set off against any head. Capital gain, yes. IFOS, yes. House property, yes. But not against salary. Other than salary, against any head you can set off. But sir, other heads are not available. Other heads are, then it will be carried forward. As per section 72. Capital loss. Capital loss, long term only against? It cannot be set off against? So its inter-head set off is also not possible. It will be carried forward as per 74. Yes or no? What about short-term loss? Short-term loss against short-term gain also, long-term gain also, but it will be set off only against capital gains. Only against short-term losses, if could not be adjusted within the same head, no inter-head set off available. Even that will be carry forward. Yes or no? Loss from an activity of owning and maintaining racehorse within the same head against the same type of activity. If not possible, then within the same head against other sources, not possible. Can it be set off? Can it be set off against other heads? Not possible. Directly carry forward. Yes or no? Will you remember all these things? These were the exceptions for inter-head set off. Now even after doing inter-head set off, losses are calculated for the first time in this year. Within the head, you tried to adjust, could not be adjusted. So you tried to set off against other heads. You could not adjust. Then you get the option to carry forward these losses for the first time. Then you get the option to carry forward these losses for the first time to subsequent years. Getting my point? Whenever you want to carry forward any loss to subsequent years, whenever you want to carry forward some loss to subsequent years for the first time, and after that the carry forward will keep on going on. Yes or no? But if you want to carry forward the loss of any year for the first time, condition is the return of income of that year must be filed on or before the due date. On or before the. So for example, this is your previous year 24-25. So the losses are calculated for the first time in this year. Now if these losses cannot be adjusted in this year, inter-source adjustment not done. So you tried inter-head adjustment, still not done. Now you want to carry forward this loss to subsequent year. This is the first time carry forward which you are trying. After this the carry forward will keep on going. But I am talking about the first time carry forward. Will it go to the next year? Previous year 25-26. If you want to carry forward these losses to previous year 25-26, can it be carried forward to 25-26? Yes. But the ROI of this year, the year to which the loss relates, ROI of this year must be filed. Must be filed on or before due date of filing ROI. Due date of filing ROI. Now tell me, what will be the due date of filing ROI for this? Either 31st July 2025 or 31st October 2025, as the case may be. Yes or no? And now you know which due date will be applicable when. I have already told you. Okay. So tell me, for us the due date was 31st July. Due date was, and you file your return on 29 July. Have you filed your return on or before the due date? So the losses of this year are eligible for carry forward in subsequent. They will be carried forward. Hello? And the subsequent carry forward will also not stop. It will be carried forward. Yes or no? Even if the return of subsequent years are not filed on or before the due date, it will not affect the carry forward of these losses. Once the loss is carried forward to the next year, every year they will keep on carried forward. Yes or no? Hello? But wait. Tell me, this year the due date was 31st July. You filed your return on 9th of August 2025. Can you carry forward the losses of this year? Can you carry forward the losses of this year? No losses will be carried forward except two losses. Loss of house property and unabsorbed depreciation. This restriction applies to all the losses except two losses. Number one, house property loss, and number two. So this year's house property loss can be carried forward. Whether you file your return on time or not on time. This year's unabsorbed depreciation can be carried forward, yes or no? Whether you file your return on time or not. But any other loss except these two losses will not be allowed for carry forward if this year's return is not filed on or before the due date. But wait. Should I ask you one thing? What is this year? 24. Losses of this year will not be allowed for carried forward. Why? Because the return is not filed. Can I say from previous year 23-24, some losses are carried forward to this year? Will they be carried forward in this year? Yes. Their set off will happen? Yes. Losses of this year can be set off? Yes. So there will be no restriction on the current year losses and brought forward losses. Yes or no? Only the losses of this year will not be allowed for carry forward. Now tell me, the losses of 23-24 are carried forward in this year, are carried forward in. Can you adjust these losses in this year? No. Last year loss, no, you brought in this year. But last year's loss cannot be set off in this year also. Now you'll have to further carry forward them. Now you'll have to further. Can you further carry forward these losses? Yes. Their carry forward will not stop. Because they are the losses of that year for which the return was already filed. That is the reason why they came in this year. So this year set off will also be permitted and their subsequent carry forward will also happen. It is not going to stop. But the loss which you have calculated for this year for the first time carry forward will not be allowed. This year losses will lapse. They will not be allowed for carry forward because this year's return is not filed on or before the. But this restriction is not applicable for this year's two losses: house property loss and unabsorbed depreciation. Will you remember? Now pay attention. House property loss of this year carried forward in the next year. Next year only against house property income and maximum carry forward 8 years. Maximum carry forward. Second, normal business loss of this year. Normal business loss of can be carried forward in the next year. Only against business income of the next year it can be set off. Yes or no? And maximum carry forward 8 years. Speculation loss of this year carried forward in the next year. Only against the speculation income of the next year it will be set off. Maximum carry forward 4 years. Specified business loss of this year carried forward in the next year. Only against the specified business income of the next year it will be set off. And if not, then it can be carried forward for indefinite period. This is 8 and this is indefinite. Getting my point? Now tell me one thing. One more thing I am asking you. Loss of capital gain side. Long-term loss, short-term loss. Long-term loss, short-term loss. Carried forward in the next year. Long-term loss carried forward in the next year will be set off against long-term gains only. Short-term loss carried forward in the next year will be set off against short-term gain as well as long-term gain of the next year. And maximum carry forward 8 years. Loss of an activity of owning and maintaining resource. Loss of an activity of owning and maintaining resource of this year carried forward in the next year only against the income of same type of activity. If not, then carry forward for 4 years. 4 years only. So 4 years are applicable for two losses: speculation business loss and loss of an activity of owning and maintaining resource. For all the other losses it is 8 years, but one loss, specified business loss. Which loss? Specified business loss. Yes or no? That can be carried forward for indefinite period. And one more, unabsorbed depreciation can also be carried forward for. Now there is one special discussion I want to do with you. Okay, no? Pay attention. If you will understand this, this is the last discussion and the chapter will be over. Okay. So tell me, this is your previous year 24-25. Okay, no? So let's see that this is your previous year 24-25. Previous year 24-25, you have some business income. You have some. Now pay attention. From this business income, this is business income minus business expense. Can I say business profits? I will write profits. I will write profits. Profits will be calculated. Business income minus business expenses. Now, from this profits of this business, current year depreciation is also there. Current year's capital expenditure on scientific research is also there. Capital expenditure on family planning, 1/5 amount. Do you remember? These three items of the current year are yet to be adjusted against this profit. Yes or no? This is the first thing which is to be adjusted against these profits. Second thing, current year loss of other business. Loss of any business can be set off against profits of any business. Loss of any business can be adjusted against profits of any business. So this loss of other business can also be set off against this profit. Yes or no? Now wait. Current year loss of other heads. Other heads like, let's say, income from house property head, and you are not following 115 BSc. So this loss up to 2 lakhs can be adjusted against any head up to 2 lakhs. So this loss can be adjusted against your business income or not? Understanding? In Hindi we call ek anar 100 bimar, meaning only one medicine is there. Medicine is only one, but there are many people suffering from same disease to whom this medicine should be given first. Priority of set off. Getting my point? So tell me, even current year those items can be adjusted. Current year loss of other businesses, current year loss of other heads can also be set off. Like IFOS loss is also there. Some loss under the head IFOS is also there, which can be set off against this. Okay. Now apart from this, there are some earlier previous years. Earlier meaning, can I say past business loss you are also having? Business loss of earlier years which was not set off earlier, so you have brought forward these business losses in this year. Do you remember? After the business loss is carried forward, after the business loss they can be adjusted only against the business income of the future. Do you have a business income of the future? Yes. Against that only this brought forward loss can be set off. Yes or no? So this profit is there. Against this profit, this business loss can also be set off. Can I say this is brought forward business loss of earlier year? Can I say there will be a brought forward unabsorbed depreciation of earlier years? So any earlier year unabsorbed depreciation was there, could not be adjusted in that year. It is brought in this year. So after the carry forward of unabsorbed depreciation can also be set off against business income or other incomes except salary. So do you have business income? Yes. So your unabsorbed depreciation can be set off against this business income or any other incomes also except salary. So this unabsorbed depreciation can be set off. Now can you have brought forward capital expenditure on scientific research? Can you have brought forward capital expenditure on family planning? Now these also can be set off against this year's business income or other incomes except salary. Now this business income is there with you. Now this business profit is watching everyone. Oh, you want me to adjust you? Oh, you also want to adjust. You also want to adjust. Swayamvar is going on. One female, there are so many kings coming to pursue her. Who will she marry first? Priority of set off. If you understand this now, there is nothing difficult than this. And that's one concept which I told you. Always finish current year adjustments first. Always current year adjustment of that business first. Then current year adjustment of that head. Then current year adjustment of other heads. What did I say? Always finish current year adjustments first. Current year adjustment of that business. Then current year adjustment of business head. Then current year adjustment of other heads. So what will be the priority? Number 1, depreciation, current year. Number 2, current year capital expenditure on scientific research. Number 3, current year capital expenditure on family planning up to 1/5. These are the current year adjustments of that business which needs to be completed first. After that, the profit remains. Then that profit will be first utilized to absorb the losses of other business in the same head. So do you have losses of other business? This will be 4th. After adjusting this, if some profit still remain, then current year losses of other heads must be first adjusted. Then it will be 5th. After doing this also, if some profit remains, then the profits are available for adjusting the brought forward losses. Now how many brought forward losses you have? Now tell me, business loss cannot also be adjusted, and brought forward unabsorbed depreciation and capital expenditures can also be adjusted. Which you should give the priority? Brought forward unabsorbed depreciation, if not adjusted against business income, can be adjusted against other incomes. Yes or no? Except salary. And the same is the logic for brought forward capital expenditures. Getting my point? But if the brought forward business loss is not adjusted against business income in this year, they cannot be adjusted against other incomes. They will be carried forward. So, which loss should be given the first priority? Business loss. Brought forward business loss. Because if these profits are used to absorb the unabsorbed depreciation, to set off the brought forward unabsorbed depreciation and capital expenditure, which can anyways be set off against other incomes also. Yes or no? What if the business profits are gone and now no profits are remaining? Your business loss brought forward will remain as it is. And what if this is the last year, 8th year? Further carry forward will also not happen. Getting my point? However, these losses can be carried forward for indefinite period. So give them the last priority. Getting my point? So now the 6th point will be brought forward business loss. 7th point will be brought forward unabsorbed depreciation. 8th point brought forward capital expenditure on scientific research. And 9th will be this. Follow this section, follow this same sequence to have the optimum use of your profits to set off different types of losses. First, current year adjustment of that business. Second, current year adjustment within the PGBP head. Third, current year adjustment of other heads loss. Then if the profit remains, then brought forward losses. Then brought forward business loss first. Then brought forward unabsorbed depreciation and capital expenditure. Will you remember this? Yes or no? This thing they ask in the exam in many questions. 10 marks question they will ask you on set off and carry forward. Single question of 10 mark having different types of losses. And how will you set off? And after set off, calculate the GTI and calculate the total income. Done? With this the chapter comes to an end. Set off and carry forward. Very difficult, no? No, made easy. Okay. No problem. You want to have some rest? 5 minutes? You want? 15 minutes? Take 15 minutes. Then we are going to complete clubbing. Clubbing is not going to take much time. I am just going to write down the section, what type of clubbing is there, that I am going to explain. Then immediately we'll solve one or two questions. So make yourself a little bit comfortable and get fresh.